All right, I think we are ready to go. Very warm welcome from the enmacc offices here in Munich, and belated Happy New Year to everyone dialing in for our new episode of the Digital Trader webinar. We are back with a whole series of interesting webinars this year, stopped in the second half of last year. We're really busy with the market and our customers, but it's an important element for us to really encourage discussions with leading experts around the markets and have a discussion as well with you as an audience, participating and interacting with our guests. So I'm really happy that we have as a first topic this year picked the GO market. I would say a little bit in the shadows of the gas and the power market last year. The GO market has seen a dramatic development in prices, in terms of volatility and influences. This is why we want to put it in the spotlight today. For us, important as well, since we are bringing GOs on the RFQ trading and tender beginning of next month. So for us as well, a new episode, bringing new, more environmental commodities on the platform. So in that way, a perfect moment to invite experts on the matter. I think we have the best we can get. It's Leo and Thomas from Greenfact. Greenfact is a leading intelligence provider on all certificates. They are really an independent, neutral voice commenting on the markets, on its influences. And I think a perfect partner for us today to dive deeper into what's driving the market, what makes it interesting in 23, and as well, perfect partners for you to ask your questions. I will hand over directly for their introduction. Please, after the presentation, please participate, get in your questions using the functionality around the chat or the F&A you have, or a Q&A on the Zoom call. I will pick up the questions and discuss them with Leo and Thomas. So enough of an introduction. Please, Leo, Thomas, take over the floor and listening to your presentation.
Hi everyone, thanks Jens for the welcoming and for these kind words. I'll just share my screen right now so we can start our presentation. Can you see it well?
Yes, we can.
Perfect. Let's go. So the agenda of today, first of all, we'll do a very brief introduction of who Greenfact is and how did we come on the market. Second of all, we'll do a recap of 2022 price developments and our new forecast, the end of the year geo supply balance in the CCS market. Thirdly, we will focus on the geo market drivers and provide a bit of outlook on the year that is to come. And last but not least, we'll answer all of your questions. Thomas.
Yeah. I mean, also welcome from me here. So my name is Thomas Eckert. I'm working in Greenfact as a lead of the Green Power Analysis team there since October last year. I've been in green certificate markets for the past 15-20 years in different positions. And happy to kind of together with Leo provide our viewpoints and our opinions and data there on the GO market. Maybe spending the one who don't know Greenfact, just spending a couple of words there where we're coming from. So we were founded by CleanWorld 2016 as a spin-off there and developed over the years and have been now kind of owned by Arctic Securities and Anders Fosse Company, both investment houses there, which are the shareholders there, Alytic in concrete under the AFK umbrella. And we have been kind of starting to, in 22, which was a very exciting year for us, a lot of changes. We have been starting to define our strategy process and our new position we want to take in the market, kind of finalize the business plan, and basically are now in the stage where we have been hiring people, we are executing our strategy, and will, among other things, launch a new platform in February 2023. Our, let's say, kind of new position or expanded position. Most of you know us primarily from EAC, green certificate markets, and providing market intelligence. So that we have a bit more kind of open up. And I think in the future, we let's say, want to position us as a kind of very well-known market intelligence platform for managing carbon exposure. So we added effectively, let's say, carbon market perspective and component to Greenfact. That's still, I think, in the let's say, build-up stage. But basically, what is the overall position we are aiming at to help companies, customers to decarbonize and fulfill their kind of goals and targets for reaching net zero over the next 10 years or 2 decades. And basically doing it by kind of focusing very specifically on market-based instruments, which are applied in renewable energy markets and carbon markets. We will provide analytical output, data, fundamental views, forecast on the electricity side of European geo market, international renewable energy certificate market. We will also expand our operation on the renewable gas side, very important market coming in via sector coupling, electrification. There, hydrogen is a big buzzword, and also kind of other kind of conversion into other energy carriers, but we are covering then also towards the transport chain. And on the carbon market side, the aim is to be present in all the compliance markets as well as voluntary markets there around the globe, to kind of offer a holistic service to our consumers to navigate in managing their carbon exposure. So that's kind of as an intro. You find more information on our webpage. And yeah, and as I said, I think it will also change in the next weeks ahead, and you will see more coming, but I'm just said a couple of words here. Then I think we go next to the geo price developments, and I hand back to you, Leo.
Yeah, thanks, Thomas. Thanks for the the brief presentation of what Greenfact is, sorry, and what do we aim at providing. So now let's focus a bit on price developments in the year that just ended, 2022. Jens said very well in the beginning that geo prices have experienced quite a hectic year, and I think all of you that have somehow an interest or kept an eye on the geo market over 2022 might have different perspective, given I mean, depending on the fact whether you look at prices at the beginning of the year and then you just take some weeks of vacation into brackets from the geo market, and then you come back in October, November, and prices have been multiplied by 5. So for me, as in my experience, I just joined Greenfact, just a tiny bit of background, joined Greenfact in March, and as you can see on the graph, March was week 12, 13. Prices were, you know, around €2 per megawatt hour for 22 and 23 vintages for the hydro, which is the benchmark product, the most liquid product. So it was kind of a stable market, yeah, constantly rising, but very, very slowly. And then across the year, it went quite up and been recorded at almost €10 in week 48, 47, which was in November. And this can be explained by a lot of factors. We'll dive a bit more into these factors in a few when we'll focus on the supply side. But yeah, overall across all the year, the 2022 production compliance year has been increasing by almost 500 euro cents from the beginning of the year till the last recorded price of 2022. Now the price is pretty stable around 6.5/7 euros per megawatt hour. But we've seen that yeah, it almost went to 10 euros, and this has been an unprecedented rise. And a lot of experts on the market players, market participants, traders, brokers, no one had ever saw that before. And this was yeah, quite a hectic year. So everyone is pretty much looking forward to see what's going to happen in 23, whether we're going to come back to this 10 euro mark that seemed completely out of of mind when you would mention this in the beginning of 2022. But yeah, a lot of attention on the 23 vintage now, which is around €7 at the moment. If we look at supply and a bit of demand side as well, you see here two charts. The first one is focused on the supply side, and the one on the right is demand side. On the left, you see the evolution of the supply side in GEOs in terawatt hours that have been issued per year. So you see a constant raise as for the demand side. But what is to keep in mind is that for most of the years that you can see here from 2012 to 2021, is that the supply side was above the demand side, meaning we were in an oversupply market and there were no troubles in finding volumes, so to say. What we see for 2022, and that will link with the forecast that with some figures that we'll present after, is that in 2022, given the drought that we experienced during the summer and some other elements, the supply will be reduced by quite a large amount, by about 50 terawatt hours, and the demand side will probably be at the same level as 2021 or above. And this will mean that we'll be in a situation where 2022 volumes will be quite hard to find. And this was also a key element in this price trends. This links to our forecast for the geo supply for 2022. So what we've done over the past month with Thomas and with Francisco as well from the Quant team, that I really like to thank on this, we've looked at the supply side on the patterns per country, per technology over the past month, and tried to forecast what could be the issuances for the latest month, October, November, December, where it's not completely fixed already, where we're trying to forecast to see how many GEOs are going to be issued and how big is going to be the geo supply for 2022, right? Because this is what you want to look at. You want to see how big the market is going to be and see whether we're going to be short or not. Because even though we're in 23, the figures aren't fixed yet. It's the EIB stats are available until November included, but they are still subject to change. So we've looked at this and we've developed the forecast model. We released the report this morning, and I'm going to share the link with you in the chat in a few, to be able to map per country, per technology, what we see, what the model, what the forecast says for the issuances in 2022. And the main takeaway from this is that in our forecast, the geo market, all technologies included, is going to be lacking 53 terawatt hours of geos compared to the previous year. So our forecast says it's going to be 694, of course, terawatt hours of geos compared to 740 last year, something like this. And the main point where we lose these geos is in hydro, which is not surprising given the drought summer that we had and given the importance of hydro in the geos that are being issued. So in our forecast says that we're going to be lacking 80 terawatt hours of hydro geos. So even though wind and solar geos that are being issued are raising compared to 2021, the fact that we're losing way too many hydro geos doesn't compensate with this small increase in wind and solar and biomass as well. So I'm going to share the link with you. You can download the report directly here if you click on this link. So yeah, this is our main finding, and we're going to be developing this because as well for the demand side and also for the supply in 23. It's still a bit early because we don't have much of the data. But if you want to take a look at this and stay in touch with us on this, please feel free to reach out. We have developed this, like I said, per technology, per country. We have monthly granularity. This is a very complete, and we're very proud of this forecast model. And it gives, I think, and Thomas will probably agree with me on this, it gives a complete overview of the supply side of the geos for 2022. And we aim at doing this, as I said, for 23, and maybe keeping on improving this model.
Yeah, I agree, Leo. I think the kind of, let's say if you go back, there one slide there, just Can you go back? Yeah. Yeah, let's say we are quite happy. I mean, we put our first kind of estimate out in the beginning of December, by the end. We now have newer data which we could use, and have trained our models there. And yeah, so I mean, one aspect of the let's say of the price development was the uncertainty where basically supply demand balance is. Demand has been growing, let's say, steadily all over the years. I think we have seen in 22 with emergency measures, I think reduction in demand. Also there were kind of legislation implemented which were requiring countries to kind of save electricity. So how it affects, let's say, green power procurement, which usually is a bit more inelastic, is that, let's say, remains to be seen. But what you can see from the statistics that like Germany, Italy, Poland, I think there are countries which are like between 5 and 10% of kind of reduced demand on the electricity side, according to the latest their statistics that is published. So yeah, it gets very interesting looking to kind of that probably demand, like based on historic kind of let's say growth rates, will remain at least let's say the same or slightly increase. And then we have the significant drop, and we were also surprised by the magnitude, especially on the hydropower there. That these, I think it's yeah, interesting and hopefully also valuable information. And since AIB statistics, which are kind of the only available statistics for kind of issued GOs, are kind of even complete to our mind only for until July last year. I think we are kind of have a quite a, let's say, that shows what the uncertainty is. And of course we when we kind of modeled this, we also kind of modeled this with confidence intervals. So there's basically a range where still these kind of let's say the issued GOs production based in the ECS market can land. And yeah, I also encourage you to take contact. We have a link if you want to know more, if you want to kind of look into individual countries, technologies, how it has been, let's say, compared to last year. And if you want to know more about our approach, how we have back tested is, which kind of data we use. Happy to kind of get in contact with you and do more explanation around it. Yeah, so then I'm kind of also wanted to show this because it may give us a bit of, let's say, interesting points to discuss in the Q&A session. That's like a bit of a snapshot how we tend to look at the market and how we kind of which market drivers we are covering already, which we will cover in Greenfact down the road. I mean, the market is very complex. We have, let's say, from our perspective, like more long-term market drivers affecting supply-demand balance, and then we have short-term market drivers which are used mostly for kind of position balancing towards, let's say, the trading year, also the year forward. And if you look, let's say, on the long-term perspective, I mean, the regulatory framework is definitely one, which also got more densified in 22 with all the legislation. There's virtually kind of every week felt some new legislation coming from Europe under the Green Deal and Fit for 55 strategy, where you kind of either deal with emergency measures, inframarginal cost affecting, for instance, also long-term power purchase agreements, where you have like demand destruction. You have to save demand in peak hours by 10% and 5% of the most of the peak hours there. There's a lot also published on electricity market design. RED 2, RED 3 is in the trialogue process, should be finalized next year. A lot of new provision in Article 19, which is basically shaping out the let's say, the ECS market. There's a lot going on the standardization, Senelec standard, which was kind of thought to be kind of landing as a kind of, let's say, European standard for GOs on the electricity side, on also renewable gas side. is still not there yet, but luckily we have the ECS scheme, which basically regulates these quite well, hosted by the Association of Issuing Bodies, where more or less all the competent authorities and registries are kind of member of, and basically take a harmonized, let's say, approach and view on the market infrastructure and the system side there. So this is, let's say, one aspect, electricity disclosure, regional products. We see there are some also market fragmentation, have seen this in the past, kind of preferences to buy local products. It's not really so much our focus in Greenfact. We tend to be more on the wholesale side. These regional products are more like really kind of retail concepts, and I think you have so many kind of shades and variants and specifics around this. So it's quite a let's say you need always a local team to cover this. I feel there's all the kind of things around, but I mean, what is interesting that some countries have taken an approach in terms of introducing full disclosure. There, I think Switzerland, Austria, Netherlands, Finland is issuing nuclear, Sweden is doing it, Portugal has started to do it. So that's, I think, a good sign, because then it brings more transparency into the market, and it will also close in on all this discussion, but we have around 24/7 certificates, CO2 tagging and CO2 tracking. So that's definitely also something, but will keep us busy, let's say, over the next I would say 2 to 3 years, until there's really a kind of harmonized, more harmonized market. So always remembering we have an EU directive, but everything else is left to national implementation at the end. One of the trigger for us, what we see is a bit of a tipping point here, is actually the next one, is like the corporate decarbonization strategies, and the demand coming from voluntary commitments to reduce your carbon footprint organizational-wise, product-wise, towards 2030, towards 2040. That's all in line with the Paris Agreement and all the follow-up processes, and a kind of basically like their contribution to the green transition. And that's a European matter, but that's also a global matter. And due to all kind of trade flows and kind of supply chains coming more into the perspective, I think that also what has give us orientation to also look down the road into the carbon market. And we want Europe on the, let's say, energy attribute certificate side, closely connected to it. PPAs, you have to observe a lot of new capacities absorbed by PPAs. There's a lot of, or let's say, the demand on the corporate side is, of course, to get as much as possible new capacity to make a more kind of additional impact on the generation side, use it for marketing, image purposes, and so kind of show kind of a good engagement. And then actually the next one, which has been moving in quite heavy in 22, is the whole aspect of new consumers and sector coupling, and that's, I think, also partly driven by the Repower Europe kind of legislation there, which basically even kind of increased targets on different energy carriers on the renewable side across Europe. I think we want to produce 10 million tons of hydrogen locally in Europe, which according to the Delegated Act of Renewable Fuels of Non-Biological Origin, also methodologies there about how to account for green hydrogen, has to be supplied by green electricity. So if you, I will show later a couple of, let's say, in German we say Bierdeckel calculations there, where kind of we just estimate what does it mean in terms of new, let's say, supply coming online. What needs to be done in order to match a kind of, let's say, mandatory green demand. And that's, I think, one really of the interesting aspects I find always, that we have been running through all the years through a kind of like I think mainly driven, let's say, a voluntary market, half mandatory, especially on the fuel mix disclosure regulations of the Internal Electricity Market Directive. But now I think, especially on the sector coupling, whether it's like transport fuel and targets, RFNBOs, hydrogen, everything has to be green, and everything is starting with green electricity and has to be converted into these other energy carriers, which basically kind of looking to the kind of type of regulations, which are mostly kind of not directive. They are kind of direct applicable legislation there. This all has to be green in order to be green on the output side. I mean, if you look to hydrogen, it has to be like, we had discussion about additionality, whether it can be only supplied by power plants which are not older than 2 years. I think this luckily is off the table, but maybe come back. I mean, depending on how the outcome is. But then it's it has to be also proven that it's physically coupled. It has to have a certain resolution, that a certain granularity was required. I mean, there are now some transition periods, but I mean, everything goes into the direction that I think granularity gets more, and also interestingly, the coupling and association of GOs with physical electricity will play one important role, especially on the sector coupling there. Last not least, I think on the long term, that's I think for not maybe for 23, but I think for 24, 5 and following years, there's a very strong push from the European side also to regulate, let's say, corporate social reporting in terms of, let's say, setting let's say, kind of providing frameworks how you are allowed to kind of document and report your decarbonization effort. I mean, on scope 1, scope 2, scope 3 emissions. So also, I think you kind of partly required by financial reporting regulations that you have to report your kind of climate strategy and your kind of decarbonization strategy. And then last not least, sustainable taxonomy came in last year, kind of decided where basically you set up a framework what you regard as sustainable in the financing sector. So what projects are really labeled going to be sustainable. I mean, we have now nuclear and gas in as well. So big discussion. Some countries are more relaxed, some are more concerned about these. Everything has a history, but I think for the transition and for, let's say, bridging in, and if the focus is on CO2 neutrality, I think it has a certain sense to have it there. Yeah, so that's more like the long-term drivers. On the short term, as Leo also explained, I think we look a lot on, let's say, fundamental factors here, more on hydrology, precipitation, snow cover. Norway has been snowing quite a lot over the past 2 weeks. So I think we really have a high snow cover there, which reservoirs are also very well filled. So probably 23 will be a lot of water pouring down the mountains and the rivers and to be used there, and maybe have a totally different year what we have seen in 22. There, wind speed, solar radiation. I mean, this is like also, if you look, I mean, on country level, technology-wise, you can see there are differences. So you have good wind years, you have bad wind years. Solar radiation is maybe a bit more, let's say, less weather dependent. So, but those are the things we already look at. We will kind of move on. As I said in the introduction, I think we are still in the build-up phase. Here have been hiring quite a lot of people into the company, just making it work now. And then last not least, market sentiment, psychology is not to underestimate. Sometimes really kind of remembering this also from my years when I was trading and managing GOs, can be dry out on one side or the other, and then its prices are either moving up or moving down quite drastically. And we have seen those peaks, I think, looking back over the past 4 or 5 years, quite frequently, that it built up, then it went down, consolidated at a certain level, and then we had the next peak coming there. Yeah, on the right side, transparent market information, auctions playing more and more a role. We have 7 countries now which are putting supported volumes into the market. New AIB members is not that issue anymore, has been, I think, over the past 10 years, a lot of new AIB members coming in, changing especially the supply side. And then third-party recognition, that's something to watch out. UK has been always one of the markets where you had a lot of imports absorbing there. That's now on the market in 22, since the UK government basically said, okay, we stop here and we use our own GoOs for our targets there. But also has been exported to Europe, so has been done a bit of margin arbitrage trading here between the different type of GOs, which are kind of around in Europe. Switzerland is definitely a case allowing imports, but it's banned from exporting due to no recognition, and energy community is coming. So systems are set up. They're really gearing, really eager to kind of participating. Plays a lot into issues on carbon border adjustment mechanism, taxation, where you have actually a connection to the carbon market. And yeah, so that's kind of, I mean, you pay the tax according to your carbon footprint of your product or of your kind of how you perform compared to your sectoral benchmark. All is going to be shaped out, but we see that going back to the original kind of, let's say, kind of setup, what we are looking in here in Greenfact is, I think we see a lot of interaction down the road between carbon markets developing and also that those carbon markets steering indirectly the demand for electricity. I think one of the perfect examples here is the carbon leakage legislation, where basically in some countries you get a recompensation mechanism for your CO2 cost as energy intensive industry, and then spending those revenues is tied up either to internal kind of energy efficiency measures or even to buy green electricity and prove that you have purchased these, which I think is a very interesting thing forward when this is actually hitting the market and the kind of let's say all the legislation is kind of more kind of fully phrased out and fully kind of implemented how to actually do this. So that's, I think, the basket of things where we are looking at, which we cover also with our publications on the platform. I would like to spend maybe 2 minutes more on going a bit on a regulatory framework and electricity demand. But I would call like primary usage of GOs and secondary usage. Maybe you go to the next slide, Leo.
Yeah, so Thomas, just to cut you there, if you can be a bit quick, we have a few questions already on the chat, and we still have only a bit less than 15 minutes, just so we can answer all questions.
Okay, sorry. Yeah, then I do.
No worries.
I mean,
the presentation will be shared with you that are attending.
So that's just a rough calculation. Like if you look to targets here, which are set now, lifted up to 40-45%, still to be decided finally in the trilogue. I think we talk about 800 terawatt hours of additional renewable supplies, which have to come in order to fulfill those electricity targets. So, I mean, bear in mind that it's an energy target. It translates quite heavily into the electricity sector. And so we did some rough calculation here. What does it mean? And the next slide is, can you go forward? Yeah, it's just kind of touching on the sector coupling. And I mean, this is like mobility, transport sector. We want to have 50 million electric vehicles. What does it mean in terms of terawatt hours, in terms of capacity to be installed, which is primarily wind and solar? It's about Transport Act and the 13% target there to fulfill by renewable fuels. Heat pumps, cooling, electrolyzers, mixing, 10 million tons, about 500 to 600 terawatt hours of new electricity production needed in order to reach those 2030 targets. So this all has to be in place in 7 years. And then aviation, maritime transport, we even have kind of clear decisions and guidance on this one. So conversion of electricity into hydrogen, and then from there serving different industrial needs on heating, cooling, chemical industry, petrochemical industry, and also mobility sector, and even not talking about re-electrification. And I can, following the German market, talking about 20 to 30 gigawatt of gas-fired power plants fired by hydrogen. I'm really interested to see how this is going to develop over the next couple of years. But that's, I think I would like to leave it where it is. I think a lot of things to discuss here. Basically, that's the three persons most heavily contributing to this, especially to the forecast. But we are published there on the GO supply, and of course we have also some views on the demand side. We have not really let's say, put forward yet, but that's always a bit more tricky to estimate how behavior of different market participants is going to develop. Okay, thanks so far. I give it back to you, Jens.
Yeah, thanks a lot.
Thanks so much.
Leo, Thomas, really interesting. I mean, give a good overview and then you lay the ground for some follow-up questions. I would love to start with one. You said you really modeled now the supply side by technology, by market, etc. Now, seeing the prices on such a high level, what comes to my mind is demand destruction. So what kind of effect can you see already? Something that people say in the environment of very high energy prices in general, the choice to go for green energy with GoOs becomes an expensive one. Is there anything you can see already, or is this more something we have to watch out this year?
I think we have to watch out a bit towards the end of March, when you have the fuel mix disclosure deadline in most of the countries there. And I mean, I don't know whether you can translate it one-to-one. I think maybe a fraction of this is, let's say you have 10% demand destruction, you have 700 terawatt hours, you have about 2,800 terawatt hours, like 4 times the, let's say, total consumption in Europe. So you have like 2.5%, which kind of then you translate what does it mean in terms of 700 terawatt hours. So it's like quite marginal if you do it like straight kind of mathematics. But I believe is it all boils down to the ability to pay and the willingness to pay. And that's a bit kind of more socio-economic kind of research what you have to do, and to see, let's say, what are companies and private households. I mean, you have to segment customers, what they are willing to pay, what they have been willing to pay in the past in terms percentage-wise of their, for instance, profit there. And I mean, we have this shift now with the energy crisis that I think sustainability is one aspect, but affordability and security of supply moving more and more into the picture and being more, let's say, primary principles now for the next time to come. So we could see a bit of drop until let's say those let's say energy costs which you pay overall for heat and for electricity coming down after we manage the crisis, and all kind of floating installations for gas receiving in Germany work, and we save on the supply side. And then kind of if other political measures are taken there, which are now discussed, it may lead to a drop in electricity prices, and then ability to pay also higher for GOs is going to remain. I think it's a bit of a fair value. I mean, we need to decarbonize. We need to kind of reduce our carbon footprint as individuals, as organizations, as countries, and it comes with a price. And if you look at the price for saving 1 ton of CO2 in the EUA market is 90 euros, I think still quite a large spread in terms of just looking to the CO2 savings. I mean, you cannot do it one-to-one, but I mean, it just gives you a flavor where basically, I mean, it all ends up into kind of renewable energy procurement, especially for corporates, is a valid measure to reduce your scope 2 emissions. And that's where they are going for and what they are kind of doing right now.
Yeah. So, but from the customer side, can be as well industrial customer, you see a connection as well to the payments for voluntary carbon certificates or for EUAs. Is this the trade-off happening?
Yeah, not really. I don't think here in Europe. I mean, we have 2 different systems. We have one for the EU ETS for the energy-intensive industry, going to be expanded to other sectors. I think that will it's independent of what we have on a regulation on national support schemes for renewable generation, and even these kind of electricity disclosure where you use GOs. But on an international scale, that's all baked in. I mean, you're kind of, if you sit in Brazil, you have a decarbonization strategy as a company. You make decisions about renewable energy procurement, about kind of energy efficiency, about buying offsets. And so you manage these as one package. And then, of course, you may have a bit of relation and you say, well, these IRECs are too expensive, so I just rather buy some offsets. So there it is. In Europe, it is not. I think we have a different regulatory framework, which interestingly everybody looks at, also on the GO side.
If you look on you mentioned the RED 3 initiative, which will bring in more perceived quality as well to the certificates going forward.
Yeah.
Is it a little bit Europe catching up with some of the other countries? Are they a step ahead of us, or what do you expect there? Is this a bold move by Europe? What we can expect there to come?
I mean, I think we are quite. I would say I think we are in Europe. I think we are quite leading on a global scale in terms of how we regulate these renewable energy procurement there, and I think also where we start now to regulate these, let's say, conversion of electricity into other sectors and getting the green transition moving forward and having these accompanied. So I think also knowing from my work there in Rex International, I think also the international countries are really looking at Europe, how you are, let's say, creating these markets. And effectively, we have quite a good degree of harmonization. We still have some kind of national specifics, market characteristics. In a way, like Spain, for instance, they have their own national system besides the ECS system, and there's a bit of, let's say, kind of effort to be done in order to export your GOs. So, but basically, the RED 3 basically moves these forward in terms of harmonization, transparency. Also, I think we will see there new aspects about kind of granularity. We talk about potential restrictions of bidding zones, which will then we see a local, regional sub-product emerging. So that will most likely come, but not 23 and probably not 24. I think more towards 2030. And then, yeah, it's the national interests there. So this is not like a EU ETS market. You have basically one European umbrella. It's like still national interests and flavors mixed in.
But still, I have sometimes the feeling that there's not this full belief into markets as playing a big role. We had this in the FAQ here as a question. Do we need to have the electrolyzer basically next to the solar farm, in order to call it green hydrogen, neglecting basically a market for GOs, but believing in these, basically physical value chains we want to build for hydrogen? Isn't there a trap somehow on the regulatory side that this is, or you know what I mean?
Not sure. I mean,
really in markets to scale these investments.
But that's where we're actually seeing, let's say, these kind of, let's say, coupled GOs, I would call it. I think where you try to couple GO with the physical flow, and then, like, if you go, especially on electrolyzers, I mean, you have the opportunity to kind of have a direct supply there, and then this is regarded to be as green hydrogen if you kind of fulfill certain requirements there. You can have it like kind of let's say, I think also let's say based on let's say purchasing GOs, but it has to be a certain profile as well. So it's I think you have different structures, I would say, from a consumer or from a market participant perspective, which you need to serve. So you should be, I would say, you should be able also to deliver physical and transport electricity from A to B across Europe, if you want to, let's say, kind of be let's say positioned well in the market.
Yeah. Well, I mean, one of these very much discussed trade-offs is the idea of more granular GOs. That you can move to monthly, quarterly, sometimes people say even 24/7 by the hour GOs, which fulfill probably this idea of being closer to production, infusing more integrity into the system, but clearly it comes with a trade-off on the liquidity of the market, and probably see some other reasons against it. No.
No, well, not much against it. I mean, it will be a natural development. I mean, some countries have moved to monthly kind of granularity on the disclosure side. I think there's an interest of corporates, also some corporates, especially from the tech sector, they're more interested to have as much as possible granularity there, and 24/7. It's a bit a trade-off here also between administrative effort and kind of what is the added value there of the granularity. And in the end, it depends on the demand. So we have to see really how demand is practical available for those products in the market. I haven't seen these yet, except for some, let's say, more technology-oriented companies which are seeing this as a tool for kind of having also a certain innovation, but it also is there and kind of it's a, yeah, as I said, natural development in the market. We have to see how it really will hit the market as a product. I think we should avoid that this is going to set up a parallel certificate system. For me, also granularity is something that already all registries or most of the registries in Europe can provide. That's all regulated via the RED directive. So it's, for me, a bit more rather a label that this kind of specific characteristic of the megawatt hour delivered is just that it have a certain granularity, and that's it. And this is like a matter of registering the megawatt hour in a certain production time frame, start date, end date, and that's it. So it's no rocket science and no kind of let's say yeah, kind of I mean, also not really disruption. So it's like the registries and the countries have to adapt it. And again, there are some new provisions in the directive, which is in the trilogue process, which is basically pointing at and which allows those national competent authorities to adopt those strategies.
Mm-hmm. All right. I mean, there's one, I want to pick up some questions we got here as well in the chat and the Q&A.
Yeah.
One goes in the direction, is GEOs, are they really a good tool for supporting the new build out of renewable power production, or is it more a tracking mechanism? Can you, from your perspective, see the effects on new builds? Maybe going as well to the question, what role does it play today in PPAs and investment decisions?
Yeah, I mean, this is like I mean, on one hand, individual preferences, whether you want to kind of buy from a new facility, which then has a much more clearer effect on adding new capacity, or you kind of buy it with a certain label, which basically guarantees you that the revenues from, let's say, your premium product is going to be reinvested into new capacity. And then you have what I talked earlier about the hydrogen. I think you have certain requirements there, which kind of have been discussed. Maybe they are on the table again in the next months, where you basically say, okay, well, you need to have a certain new renewable installation in order to provide the power to the electrolyzer, which I think makes sense more for the period after 2030. I mean, we are now at the 28 kind of transition deadline here. So this is this makes sense. And if you look at the price level of €7 as it is today, and you have a power price in northern Norway of €20 per megawatt hour, I think, and looking to the long term, or let's say the marginal cost of electricity production of wind power and solar power on the long term, I think it can make a contribution. And it also is basically, on my end, I think we are phasing out all these national subsidy schemes that are fit, investment subsidies and those kind of things. And we try to kind of support now with the GOs by creating the demand side and activating this, the substitute for supporting new power generation from renewables on the generation side. And that's, I think, a good thing. So we basically have achieved what we started like 20 years ago, bring costs down and then see how we can finance this via voluntary market. That's a good thing.
Mm-hmm. We got one very specific question, but I think it has a wider context. In Germany now we have basically a taxation of intra-marginal profits, as we call it. So could that lead to PPAs not including the GOs to bring down the prices? So could that lead to a split of the traded power versus the GO, the green quality?
I mean, it could. I mean, I mean, in the end, it's up to the buying side whether they want to have the greenness contracted as well. And if they do, then it has to usually go via GO on the PPA. So and I think the inframarginal cost is, I mean, we are talking here about €100 in Germany, €130 if you have a wind EEG installation. Mm-hmm. I think if you look at when you are, let's say, in the I don't know what there's the last kind of tenders there. I think they ended up at around 70 euro mark. I think it's still a good payment on the infra marginal cost for wind power producers, I would say.
Enough in there. Good.
Even if you would discount for the market value on the spot exchange.
All right, we have a little bit of time left, so I encourage people to bring in another question if you have one, and really want to see that. One question I want to pick up here again is that we've seen these very high prices, so mostly driven basically the benchmark contract, Nordic Hydro. Is that shifting as well awareness to other regional markets, to new regions and technologies, bringing them more into the focus?
Leo, you want to share your French perspective?
Yeah, I mean, on the regional perspective, thanks for the question, Jens. Yeah, I think pretty much all regional prices, whether we talk about EU as a global region or French or Belgian production, even Italian production, mostly for wind, they have been pretty much following the same trends as the benchmark product. As we saw, the spread all across the year, even when it went to 9.5, almost 10 euro per megawatt hour, it was pretty tight. So there are still some markets that are traded with a premium, some regional ones, but overall I think prices are still pretty much within the same window. But of course, what we look at closely for these regional markets, or at least country specific, are what Thomas mentioned within the market drivers are the auctions, of course, notably in France, Italy, Luxembourg, and some other countries, and Portugal, of course. And this gives really good really good price indication on specific on country specific products and their technologies. But usually these it's always a question of who's the chicken, who's the egg, right? Are they the auctions driving the OTC prices, or are the auction already pricing the OTC movements within the auctions? But we're going to release very soon, probably with Thomas, a paper analyzing the auction trends, and whether this follows the OTC prices or whether the OTC pricing are calcing themselves, French translation to English, sorry, parallelizing their movements directly to the OTC market, and traders and market players are keeping a very strong eye on the auctions, and they're seeing, okay, this goes pretty much in the direction of what we saw, so that means it's the good direction. So yes, this will have a bigger and much higher importance in the weeks, months, and years to come, regional markets or production. So and we try to put this in on Greenfact as well, to bring the country of origin whenever we have it. It's pretty tough, but always trying to bring more transparency and granularity on this information.
Yes, maybe to sum it up a little bit, and your mission is to bring in this kind of smart models and predictions into the market as well. How would you see the maturity of the market right now? How are GOs traded? What has happened? Has it evolved in the last year? And what are the next steps to come in terms of maybe as well participants being attracted to the market, tools being used, etc., competitiveness?
Yeah.
Big predictions there, or trends?
I mean, trends, definitely. I mean, the market, as it becomes more harmonized, it's also easier to commoditize it. And I mean, especially on the wholesale market, I think we have a very strong support now, also from the regulatory side. It was a bit unsure. Also, I think we had discussions there earlier, but the CO2 tracking and grid factors and GOs used as a system to kind of book and claim system for renewable procurement. But I think this is decided now, and I think we have a strong anchorage in the renewable directive and all the other legislation which is there on the sector coupling. You have GOs for renewable gas, GOs for hydrogen, all serving also voluntary purposes. So this is definitely now something where I think we will see new market players coming in. It's going to be a serious market. I think also the price lifting there. I mean, we have been like let's say 3-4 years still at 20-30 cents. Partly there, and then definitely I think we need to get more transparency, and that's basically what we try there, because you have only a few let's say, sources of information, especially on the issuance on the GO side via the registries, via the AIB, and but they are kind of putting up a new database system. They kind of redesign their central hub, the transaction hub, which allows cross-border trading. And I mean, market infrastructure, price, regulatory anchorage, voluntary demand. I think everything is a sign for maturing market. We have more liquidity in the market as well. On the trading volumes, we have the exchanges in some like Apex, EX, think about reintroducing a kind of hedging product, which I think definitely comes if you have like long-term commitments, but you need to fulfill. Like if you want to produce green hydrogen, I think you will see a lot of these kind of aspects becoming more and more relevant. Yeah, so we are not, let's say, on a mature market like we are in the power market, definitely not. But I think we started to work quite well now, I would say.
Sounds good and interesting for everything what's to come.
Yeah.
Our hour is already over for today, so it was really interesting. Thanks a lot for sharing your broad perspective on this market and for sharing the document as well. I hope it allows for some participants to dive deeper into it and get in touch with you and really understanding what it means for them. For us, as I said, GOs will be in focus as well in the next couple of weeks. We're expecting a lot of activity there and see already the interest from our customers. So we're more than excited to make this a continuous topic for us and invite you back in this webinar here. Thanks a lot, everyone.
Thanks, Jens.
Thanks Jens, also. So we're looking forward then for the next round.
Excellent. Very good. See you soon. Bye-bye.
See you soon.
Bye-bye, everybody. Bye-bye.